Financial centers worldwide are fixated on the newly implemented taxation measures announced yesterday evening, which have sent shockwaves through global markets. Despite some midday recoveries, trillion-dollar losses continue to accumulate since these policies were introduced late last week, with indices sinking to concerning lows by closing bell. At this moment, it's 3 o'clock in Beijing, and according to administration officials, the world's second-largest economy will face the full impact of these sweeping trade penalties in just 9 hours. We're experiencing unprecedented market conditions, financial analysts note, as wild fluctuations continue. Following the evaporation of trillions in market capitalization during this week-long trade policy spiral, American exchanges are showing signs of modest recovery. Obviously, market instability persists, remarked one commentator as stocks showed positive movement following yesterday's rollercoaster session. The ongoing trade disruptions have prompted economic forecasters to increase their predictions for an impending recession. European markets opened dramatically this morning. Catastrophic and devastating were terms used by financial correspondents to describe the situation. Fresh lows continue to emerge after previous record drops. As the saying goes, day trading generally carries negative connotations since prudent investors focus on long-term fundamentals rather than hourly fluctuations. However, today proved especially challenging for short-term traders, extending a streak where global markets have shed over $6 trillion in value. Coming up next, we'll explore how several prominent supporters of the administration are publicly discussing their substantial financial losses and sharing these details with their followers, a trend with potential political ramifications. First, let's examine the latest numbers. The top 500 corporations have declined 12% since Thursday, losing another percentage point today. Similarly, the industrial average has fallen 11% since Thursday, dropping approximately 1 point in today's session. Congressional developments show an increasing number of majority party representatives considering defiance against the administration by attempting to restrict these trade authorities. This represents a rare occurrence during these past 70-plus days when American news anchors rarely report on party members seeking to limit presidential powers. In the Senate, 7 members from the president's party have officially positioned themselves against these measures, publicly stating their concerns despite potential primary challenges in supportive states. They've committed to reviewing the executive's trade authority and what many economists view as financially damaging import taxes. Both parties questioned the administration's trade representative today. One senator from the president's own party remarked, "I understand you serve as trade representative, so if this decision falls under your responsibility, I'll hold you accountable for its success. If it's not your decision, I'm simply trying to determine who should be held responsible if things go wrong." Meanwhile, the Treasury Secretary spent the weekend at the president's Florida estate. According to political publications, the secretary believes markets will continue deteriorating unless rhetoric shifts toward negotiation, potentially offering an exit strategy from current policies. The publication quoted sources asking, "What's the ultimate objective here?" Prominent business leaders are speaking out. One major corporate executive stated this represents a moment to acknowledge a tremendous error and adjust course, or the nation will suffer economic consequences for years. Another significant donor and influential supporter characterized the situation as completely misguided. A tech industry leader who strongly backed the administration is reportedly using his influence to directly appeal for policy modification or complete reversal if possible. This situation highlights a notable economic advisor whose portfolio centers on trade policy. This individual, considered one of the principal architects of these tariff measures, has become embroiled in a public dispute with the aforementioned tech leader, who described him as intellectually deficient, using more colorful language. The advisor responded by dismissing his critic as merely an automobile assembler, not a genuine manufacturer. As the primary trade consultant, this advisor finds himself increasingly central to ongoing discussions. His approach to tariffs has drawn particular attention and occasionally criticism. When questioned whether these measures represented a negotiating position, the advisor emphatically stated, "Let me be absolutely clear, this is not a negotiation. This is a national security imperative." However, this statement appears to contradict the president's own remarks that these tariffs provide substantial leverage for negotiations, as they always have. The inconsistency prompted commentary programs to simply juxtapose these conflicting statements without additional commentary, letting viewers draw their own conclusions. While the advisor maintains strongly protectionist views on import taxes, responsibility ultimately rests with the chief executive, who seems to have created what appears to be giving every benefit of doubt confusing messaging amid these economic challenges. Notably, the same day the advisor declared in writing this is not a negotiation, the administration's communications team posted then deleted its social media sharing of this opinion piece. This advisor isn't alone in facing such policy whiplash. A political strategist aligned with the administration noted, the president was elected to reduce inflation and stimulate economic growth. Higher prices and slower growth resulting from these tariffs directly contradict what Americans voted for. Public sentiment reveals similar concerns. One citizen remarked, "I know people who supported this administration. This isn't what they expected." Another person at a community gathering in a district that overwhelmingly backed the president stated, "I'm a loyal party member who voted for this administration, but this doesn't align with what I supported." These are the current facts alongside various reactions. Next, we'll examine something critically important regarding political realities: whether additional members of the president's party will oppose these measures, whether congressional limits on tariff authority might materialize, and what these developments mean for our democratic institutions that have faced significant challenges. Interestingly, some of the most vocal administration supporters are experiencing multi-million-dollar losses in real time and candidly sharing these setbacks with their audiences, demonstrating transparency by acknowledging, "I'll be straightforward with you." The consequences of these developments must be seen to be fully appreciated.